Where has this money been put? Towards what kind of financial technologies?
Thank you for having us. 2018 was a banner year for fintech globally. We saw record levels of funding as well as 1,400 investments across global fintech. We also saw record levels of mega rounds, or $100 million plus investments, go to a range of categories in digital banking, payments, as well as companies in emerging markets and in frontier markets.
Look, tech is disrupting, financial transactions and trends across the board. But Julie, what are the technologies that are actually taking off?
Some that you've seen take off a little bit more is companies like Robinhood are making free trading very popular. You've seen places like JP Morgan start offering a lot of that as well. Other places that are a little bit more advanced are like the robo-advisors. You've seen places like Vanguard, Charles Schwab copy a lot of the same things that they're doing. And another one is neobanks or challenger banks, which are essentially like these online only banks. And Lindsay, you actually had a really good report on challenger banks earlier this year. Most people have never heard of challenger banks, so explain exactly what they are.
Yeah, 2018 saw a renaissance of neobanks or digital challenger banks open up access via mobile applications to this new class of consumers to access free, if not lower charged bank accounts. They're growing in the millions and they have been expanding globally.
Lindsay, what does this mean for jobs? We spoke to the CEO of Wealthfront earlier this week, talked about how AI, completely disrupting the sector, making decisions more quickly that humans can't. So does that mean there will be less human jobs in the financial sector in the future?
That's a difficult question, but we see this as opening up the market for opportunities not only for fintech investments, but also for banks to create new opportunities for jobs, and it's really growing the market.
One thing that we look at on days like today, days like yesterday, when the market is extremely volatile, is a company co-founder or founder. I don't know that I would actually want my company to enter the public market, especially in an area like fintech, where we've had places like Lending Club, OnDeck, others enter a few years ago, and they're down more than 50% since their IPO. Do you think we finally start to see that change? I mean, we have some places out there like Credit Karma, Stripe, Robinhood, and others that are rumored IPO candidates. Do they do that in 2019, or do they wait until a little bit after that?
IPOs have taken a slower approach to going public, and we think we'll continue to see that in 2019. Credit Karma and Stripe both raised mega round investments this year, raising their valuations, so they're well capitalized to ride out that volatility, but they're more focused on their product, and their strategies are aligned with that. We saw Credit Karma make 3 acquisitions this year, expanding into mortgages here in the US and also expanding their global footprint in the UK. So an IPO might not be something that's in the imminent future.
So do you think the pace of investment will continue? Will we see so much money put into fintech in 2019?
We saw mega round investments boosting funding this last year going into established categories, and while that might look a little bit saturated, we could continue to see some of that investment flow into 2019, again, as these companies really look to iterate on product and expand and scale into global markets.
What about the opportunity for some of these larger banks to actually start buying some of these fintechs? Because for every Credit Karma, there's a slew of other companies that have gained some traction but haven't raised at valuations that are too high for someone like a JP Morgan or a Bank of America or Goldman. We've seen do some of this so far. Do we see more of that next year?
Yeah, 2018 was a surprising year because banks started to make fintech acquisitions, which is something they haven't traditionally done in the past. Goldman's a great example. They acquired Clarity Money as a way to scale their retail arm, Marcus. So it's something that they could look to do if they want to scale their product. But banks have broadly been investing in their fintech strategies, making investments in the category, as well as looking to get digital internally and building some of the solutions in-house.
Got it. And then, like I mentioned earlier, there's been a lot of bigger incumbent companies that have copied some of the startups. How do the startups sort of make sure that they're, creating enough of a moat around what they're doing that they can continue to have that advantage and scale enough where they do have an exit that is not just, getting bought by a bank and potentially going public instead?
I think staying laser focused on the customer and continuing to build products that solve those pain points is how they're going to continue to grow and keep their customers loyal. Trust is a big thing with fintechs, and that's why they've been able to not only keep and attract talent and customers, but retain it as well.